Hey guys, welcome back to another cryptocurrency news article. This one comes from Cointelegraph. And what is the global financial crisis and its impact on the global economy? Now, this is definitely a good article to pay attention to. Definitely goes over what happened in 2008 and was Bitcoin created because of this? Well, let's go over this article. The global financial crisis was a widespread economic downturn that began in 2008 and resulted from the collapse of the housing market and investment banks. Now, this was never really fixed, too. Most people understand that just a band aid was put over and we were due for another financial crisis. So, yeah. When the financial system or the economy as a whole undergoes a rapid and large decline, it is said to be in a financial crisis. Financial assets like stocks, bonds, and real estate often see a sharp and significant decline in value during financial crises. They can also be identified by a decline in credit availability and a loss of faith in the financial institutions like banks. So it's kind of sounds like Bitcoin was needed for that. But the financial crisis can be caused by a variety of factors. And now here are some of the things that could cause them and why. So, one, over leveraging. When people, businesses, and governments take on excessive debt, they put themselves at risk of a financial crisis or a financial collapse. Asset price and bubbles. When the cost of an asset, such as a home or stock, rises quickly, that can also lead to a financial crisis when the prices fall sharply. You got bank runs. This is when enough customers attempt to withdraw money from a bank at once. The institution may be insolvent and shut down, triggering a financial crisis. There's also financial institution mismanagement, financial institutions that are poorly managed and they may become bankrupt or fail, which could trigger a financial catastrophe. Now, economic recessions. A financial crisis can result from an economic recession, which is defined by diminishing economic activity and growing unemployment. So, yeah, all of these can cause that. This article will discuss the global financial crisis of 2007 to 2008 and its main cause and how the financial crisis impacted the economy. Now, what is a global financial crisis? The global financial crisis of 2007 to 2008 was a major financial crisis that had far reaching impacts on the global economy. A housing market bubble, unethical subprime mortgage lending practices, and the overproduction of sophisticated financial products like mortgage backed securities, and they all contributed to its cause. Now, the subprime mortgage market in the United States specifically served as a catalyst for the 2007-2008 global financial crisis. Loans with risky lending terms and high interest rates were given to borrowers with bad credit records under the phrase subprime mortgages, a housing market bubble in the US, and was brought on by the rise of subprime mortgage loans and subsequent marketing of these loans as securities. Many borrowers were unable to make mortgage loan payments when the housing bubble eventually burst and prices started to plummet, which sparked a wave of foreclosures. The value of mortgage backed securities decreased as a result, and the global financial system experienced a liquidity crisis, which set off the GFC of 2007-08. Now, due to the crisis, home prices significantly dropped. There were a lot of foreclosures at the credit market, and the credit markets were frozen. This in turn sparked a financial crisis that required government intervention and bailouts, as well as a global recession. The crisis effects were felt on a global scale, using widespread economic distress, as well as a fall in its employment and economic growth. So again, a band-aid was placed over from coming in. And also, if you guys really want to see this, watch the movie The Big Short. Great movie, and definitely goes over this time and what was going on with it. But yeah, now what are the main causes of the global financial crisis? The financial crisis spread quickly over the world as a result of the financial market's globalization and the link between financial institutions and nations. The following are the primary reasons for the global financial crisis of 2007 2008. So there were subprime mortgage lending practices. The banks or other financial institutions made riskier loans referred to as subprime mortgages to consumers with bad credit. These loans were frequently packaged and offered for sale as securities, which inflated the housing market. There was a lack of regulation. The absence of regulations in the financial sector led to the emergence of complicated financial products that were challenging to evaluate and comprehend, such as mortgage backed securities, credit default swaps, and risky lending practices. The housing market bubble. In the US, a housing market bubble was brought about by the subprime mortgage lending, combining the marketing of these debts as securities. Housing values decreased as the bubble eventually burst, and many borrowers found themselves unable to make a mortgage loan payment. And then there was credit market freezes. Credit markets became frozen as a result of the decrease in value of mortgages-backed assets, making it impossible for financial institutions to acquire capital and resulting in a liquidity crisis. Now, what are the consequences of global financial crisis? Like what happens from this? The consequences of the global financial crisis of '07 and '08 were far-reaching and long-lasting. Some of the most significantly impacted of the global financial crisis on the world economy included economic global recession that brought forth by the crisis was defined by a sharp decline in economic activity, dropping output, and rising unemployment. There were several sizable financial institutions that failed as a result of the banking crisis, which necessitated government intervention in the form of bailouts and recapitalizations. The housing price declined. The US housing price slump that caused a large drop in house wealth and a wave of widespread foreclosures served as the crisis catalyst. There was a rise in public debt. Public debt increased as a result of numerous governments' interventions to maintain their financial and economic systems. Political repercussions. The crisis led to a decline in confidence in the government and financial institutions and fueled the emergence of populist and anti globalization views. Financial sector reform. The crisis led to significant changes in the financial industry, such as more rules and oversight, which are intended to lower the likelihood of future financial crises. Now, was Bitcoin a response to the global financial crisis of '07, '08? Well, it did come out in '09, but Bitcoin was partially created as a response to the global financial crisis. The financial crisis brought to light the weaknesses of the established financial system and the risks of reliance on centralized financial institutions. The creator of Bitcoin, who went by the alias Satoshi Nakamoto, created the digital currency with the intention of building a more secure and stable financial system that was not vulnerable to the same kinds of hazards as the conventional financial system. The invention of Bitcoin and the emergence of cryptocurrencies and blockchain technology that followed are considered a rejection of the existing financial system and direct response to the negative effects of the global financial crisis of 2008. The public ledger that contains records of every transaction on the Bitcoin network makes it simpler to track and to keep tabs on the movement of money that and this aid the suppression of dishonest behavior, including insider trading, market manipulation, and unethical actions. So yeah, was it created from it? Totally. But yeah, with all these like things that happened, like does it sound kind of familiar? If you pay attention to the news, like look at what's been going on the past 3 years, 4 years to be exact, it's like all the stuff is really happening right now again. And if you try to see people trying to even sell houses right now, like we're following the same trends as all of this happened. Like I started noticing more houses go up for sale, and then at the time, no one can sell them. It was too high for people, like everything going on. And then eventually you see more and more, and then eventually people just leave everything. Like it's getting pretty crazy. And so again, I recommend watching The Big Short, and like who knows, we could see the exact same thing. But again, these are the times when if you position yourself right, you can take advantage of these financial crises. Again, dropping the low prices. If you have your money in the right assets, and then you can then disperse it, reinvest it, like at the right time. This guy also know when to buy. It's like I can't tell you when that is, but you can definitely take advantage of these moments. But yeah, great article. I hope you guys did enjoy it. If you did, hit that thumbs up, subscribe to the channel, and until next time, the Crypto Sherpa is out.